Hello, everybody. So, I'm going to do another deep dive on SMCI today. So, a quick preface about SMCI. I'm aware it's a fully volatile stock, very volatile. I'm aware of this. But why has it been volatile, right? Because of some of the accusations of accounting issues, the CEO saying there's no accounting issue, the auditor leaving, an independent audit being investigated, a new auditor coming in, a independent committee finding no issue, the QQQ exit because the market cap became too low. Anyways, this has been a long saga and I've lost track, but right now the current stage is that we wait for them to file their delayed audited financials consistent with their plan that they have to stay in compliance with the NASDAQ, and they must file by February 25, 2025. At that point, the saga will end, and so you need to be comfortable with the risk that they're not going to file, but there would be so much capital leaving the company if they didn't file. In my view, they are going to file. But that's a risk I'm willing to take. And of course, this is never financial advice on this channel. So it's up to you. It's a risk one is willing to take. We're aware that it's a battleground stock. There's battleground risks. So now that I've gotten that out of the way and told you it's not financial advice, let's go ahead and focus on the company. So the company is, of course, an IT solution for enterprises, cloud and AI and 5G and edge infrastructure. They provide these racks, they provide the cooling, they provide all of the hardware, the equipment in data centers that is adjacent to the chips. They don't do the chips, they do the bulky equipment that wraps the chips. And they have a special focus. They've had a special focus for a long time, which is called sustainable IT or green computing or green IT. And in the case, green sometimes gets a bad rap, but in the case of IT, green IT, a bad rap in the sense of profitability. In the case of IT, green IT is actually very, very profitable because it lowers your total cost of ownership. Green IT is all about inexpensive operation of the data center. So you want it to be green, you want it to use low energy, and that's how they found themselves in this position of being a leader in liquid cooling, i.e. green IT, and that's why they did so well with NVDA recently and their positioning with NVIDIA. So let's talk about the growth. Their goal, their objective in their last presentation is to have 50 billion in revenue. That's their objective. And you can see they have 5 solutions where they hope to get there. They've had tremendous growth over the past 3 to 4 years, and they hope to continue that growth. They're not at the 50 billion in revenue mark yet. They're currently sitting at 15 billion in revenue trailing 12 months. The stock has had explosive growth thanks to that AI and data center boom. But of course, the reason why I'm excited about this stock is because I'm a growth investor. And as a growth investor, I look for inflection points. I look for even increases in the growth, and with NVIDIA Blackwell, I think we will see an increase in that growth. Why? Because NVIDIA's Blackwell, the new series of chips that NVIDIA is releasing in 2025, they are going to need liquid cooling. I read a few things that a few of them can be air-cooled, but the bulk of them is going to need to be liquid-cooled, and of course, SuperMicro is a leader in liquid cooling. You may remember that CEO letter from Charles Liang, the CEO, in August, where he claimed to have a 75% market share in large-scale liquid cooling AI data center deployments. I don't really know how he defines large scale, but it's pretty clear that they have a big market share. In fact, one of the most praised data centers recently is Elon Musk's data center in Memphis, and you can see him reply on this tweet, and he's saying, half of the data center was by Dell, and the other half was built by SMC. So if Dell and SMC build the data center of Elon Musk, one of the largest AI deployment, we can expect that SMC is going to bid on a lot of these deals. And you can see my former deep dive on this where I focused on liquid cooling more specifically. The point is, the liquid cooling market share is expected to explode with NVIDIA's demand, with the demand for the Blackwell of NVIDIA, and they have been investing in their operations, in their campuses. They've been working hard in Taiwan to try to expand and service that demand, create that demand. Growth has been the focus of the company SMCI, and my thesis for owning SMCI as an AI play is simple. Liquid cooling is very beneficial to data centers because it gives a space saving, and you reduce space by 80%, so you don't need to increase the size of a building. You don't need to go through a permitting process, the town process, where it can take years to expand a building. No, you can just use the current space, but stack more into that space, and so it reduces your space used by 80% thanks to liquid cooling, and also it reduces your power used by 40%. So it's addressing two major limiting factors of the expansion of data centers, and of course those data centers are going to need liquid cooling for Blackwell. So that is my thesis in a nutshell. I'm looking forward to the rollout of Blackwell. This SMCI stock is dependent on the success of NVIDIA. If NVIDIA does well, SuperMicro should do very well, in my view. Now, of course, why am I so attracted by SuperMicro? Well, I am a growth investor, but I'm also a value investor. I like to let valuation guide me in my picks. If you look at, for example, Vertiv, which is another company in the space, you can see enterprise value over gross profit over revenue growth. How much am I paying for that growth? You can see it's almost 5 times more expensive. Vertiv, which is another pure play liquid cooling, is almost 5 times more expensive on a growth adjusted basis. This is my spin on the PEG ratio of Peter Lynch, but I don't use earnings. I use gross profit in my metric. You can see, and that's because these companies are optimized for gross profit because they're growth companies. So they may not be optimized in their OPEX yet, but they're optimized for gross profit. I don't touch companies that are not optimized for gross profit. Anyways, the point is it's about 5 times cheaper than a pure play liquid cooling. It's way cheaper than Dell, but the reason why Dell is not looking cheap at all is simply because Dell is not a growth stock. There is no growth at Dell, despite how exciting the liquid cooling may be. That's not going to move the needle for a company like Dell, but it's definitely going to move a needle for a company like SMCI. You can see it's much cheaper than NVIDIA. Well, slightly cheaper than NVIDIA. Worth mentioning that at 126, I do find NVIDIA cheap at 126. It's cheaper than AMD, and it's cheaper than the quote-unquote value stock of growth semis, which is Micron. It's cheaper than Micron. So I find this stock very compelling. Enterprise value over forward sales is a 0.7. Enterprise value over trailing 12-month sales is a 1.13. It's predicted to grow sales at 62% in 2025. The EBITDA margin is at 9%, and my view is that they're going to get some operating leverage. That EBITDA margin is going to grow as they ramp up. And of course, if you are a trader, you may be interested to see that this stock is down 75% from its peak. So in my view, it's a good deal. AI exposure for the price of HIMS? Question mark, sign me up, because this is roughly the same valuation as HIMS, but it's in the AI space, which is supposed to be a much more prized area in the market right now than, say, healthcare and the beaten down stocks in healthcare. So anyways, I find this stock very compelling to me. This is not financial advice, but to me, this is a good exposure. And that's because, remember, I'm okay with that risk. Many people are never going to be okay with that risk, and that's fine. But I'm okay with that risk. I'm also okay with some of the tariff risk. There could be some tariff risks with chatter about taxing products out of Taiwan. You also have to be okay with that risk. I think that stock dropped a little bit based on tariff fears on Taiwan as well. Anyways, let me conclude by saying this. Another way to play this or to like this is to harvest the volatility. This stock is extremely volatile. In fact, if you look at the implied volatility of this stock, it's 140 right now, which is crazy. So what does that mean? Well, I like to acquire this stock by writing cash secure puts that are near the money. And so, like, let's say today, so I'm recording this video yesterday when you see this video. This video is going to be released on Wednesday. Today's Tuesday. So today on Tuesday, it's really 3.5 trading days. You can earn 123 for writing a cash secured put and putting aside 2,700 of collateral. So your yield in 1 week is roughly 4.4%. And I'll let you multiply 4.4 times 52 to figure out how much yield you can earn on a stock like this. Now, of course, this is risky. You're gonna get assigned on this, right? It's like, I mean, not quite 1 out of 2 if you look at the delta, but close to 1 out of 2 you're going to get assigned. So in order to get that yield, you have to be willing and able to be assigned, which I am at this price. At 27.50, I'm willing and able to buy the stock, and you have to also be willing and able to miss out. And since I already have a little bit of a position, I'm also willing and able to miss out. Writing puts, it fits a certain profile. There's a lot of boxes that need to be ticked, but if they do, that can be beneficial. And I think a lot of people are also interested in SuperMicro because of the volatility of this stock, and it allows them to fit their strategy. Also, I find the stock cheap. I like the stock. This was not financial advice, not investment advice. This is just entertainment. Hoping you were entertained. Please like, please subscribe. Follow me on Patreon. Follow me on X. Thank you for watching and have a wonderful, wonderful day.